Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Markets fall another day in a row. Intel plunging after warning of a major production delay as tensions rise between the United States and China, tit for tat. China now ordering the United States to shut its consulate in the Chinese city of Chengdu after the U.S. ordered China to shut its consulate in Houston, Texas. Meantime, cases of COVID-19 continuing to rise with more than 4 million reported across America. But today, the U.S. Centers for Disease Control advising schools to reopen after originally highlighting the risks amidst criticisms from President Trump. It all added up to another down day for stocks. Joining us now, Abigail Doolittle. Abigail, a lot to digest here.
It's certainly a lot to digest, and you really nailed all of the issues, because while a piece of it, a big piece of it, has to do with the big tech sell-off, it also, these rising China tensions, once again, that's been in the backdrop now for about 2 years, but really coming more into the forefront here. And economic data, quite frankly, not great either. So investors paying attention to that. So when you put it all together, the NASDAQ 100 down 0.9%, also down on the week for a second week in a row. The stocks hit even harder, down 1.6%, because as you were mentioning, Intel really disappointing at the lows, down 18%. Its worst day at that point since 2002 on the third quarter guidance, that chip delay that you're talking about, and also the idea that manufacturing of their chips could be changed. So you did have investors going into a haven asset, sometimes considered to be a haven asset. Let's call it a haven asset today. Gold above 1,900 for the first time since 2011. So risk off for sure. And I was just mentioning the NASDAQ 100 down on the week. That's true for 2 weeks in a row. We were talking about this last Friday, Emily. Last week, the NASDAQ fell as the Dow and the S&P 500 climbed. The last time we saw that happen, it was all the way back in the late summer and early fall of 2018, where out of nowhere, it seemed like we had all of that bearish volatility to the downside. So perhaps not an auspicious signal, and especially given the fact that we now have that NASDAQ 100 and the NASDAQ down again. In fact, all of the major averages here in the U.S. Down on the week.
Right. Let's talk about the NASDAQ 100 being down there. Was this because of those mega cap stocks, or were there other stocks in play?
Well, from a point standpoint, yes, the mega caps really got hit, and because of that weighting, they dragged. But there's some bigger percentage decliners. Align Technology, not actually a big mega cap tech stock, but actually the company that owns Invisalign. That stock, the worst percentage performer on the NASDAQ 100. Quite frankly, priced to perfection. Out of the March lows, up 149%. They did not give guidance for the third quarter. And as you can imagine, an orthodontic company in the second quarter did not do great. So that stock was really hit. So was Citrix Systems, another case of price to perfection for a tech stock. Their cloud business was down sequentially another time in a row. A little bit surprising to some, Emily, given the stay-at-home environment, and folks thinking that would help Citrix. And then Apple and Facebook down in a big way on the week. And they, of course, report next week. Hopefully, this is not a signal of what's to come, but I think that there is this overall sense that some of these tech stocks have been priced to perfection. To end on a bright spot, though, Emily, AMD on the week, a huge, huge week. Its best week, in fact, since 2016, up, take a look at that, 26%. And that, of course, has a lot to do with Intel's pain. That is AMD's gain, because as they're unable to produce those chips, some folks thinking, well, maybe AMD will be able to pick up some market share.
Absolutely. And we're going to be talking a lot more about the chip market a bit later in the show. Bloomberg's Abigail Doolittle. Abigail, thank you so much for wrapping up the week for us there. Meantime, to talk a little bit more about the tech sell-off and what to look ahead to with big tech earnings coming out next week, Lee Drogan, the founder and CEO of Estimize, is with us. Lee, thank you so much for taking the time. First of all, what do you think is driving the sell-off? I mean, we've seen tech continue to rise up and up as the shelter in place has continued in certain places. Working from home has continued. What do you think is really driving this?
Well, I mean, it's a technical reversion trade. The quants have been running this model here, and it's gotten away from them a little bit. So that's expected. But on the fundamental side, I think the story here is how much of the adoption curve has basically been pulled forward. And a lot of the different trends that we're seeing were obviously already active in the market. When you look at things like DocuSign and Twilio and Zoom and Teladoc, these are names that are up a considerable amount, and the fundamentals somewhat justify it. But as we get into earnings season, the story is going to go from, wow, the adoption curves are obviously accelerating, to does it make sense, the multiples that they're trading at? Not necessarily for the reports this quarter, but when we look out at, Q3, Q4, 4 or 5 quarters out, what do the growth rates in those quarters look like? Are we seeing upward or downward revisions in those quarters? Because that's really where investors are going to sit there and say, okay, yeah, maybe this quarter it's 100% growth or 150% growth, but what is it going to be, once life normalizes here? And I'm a little bit afraid that, we're not seeing the same kind of upward revisions in those out quarters that we are in the current quarter.
So let's talk about some of the big tech companies reporting next week. You got Facebook, Alphabet, Apple. I want to start with Facebook and Alphabet because obviously they depend on the advertising market. We saw Twitter report its results yesterday. Huge growth in users, but ad sales hammered. And we know that Facebook has been in the middle of an ad boycott specific to the social network itself. What are you expecting to see when it comes to those companies, given that we have in general been seeing a global retraction in advertising?
Yeah, so I think last quarter was very indicative of what's going to take place in the future quarters for Facebook, where that platform is able to basically shift demand around. If a piece of it falls off, others just pick it up because smaller companies that their acquisition rates used to be too high and now are in a range where they can pump a ton of money into it. And so, overall, we don't see it as being a problem. We haven't seen major downward revisions to Facebook's numbers. When you look at Mark Zuckerberg's comments around how he perceives the long-term nature of the boycott, he just doesn't seem to care. Now, obviously, there's an aspect of showmanship associated with that, but I think it also does pretend to the fact that he's looking at the numbers and he's just not afraid of it. When I look at Google, I think that may be a little bit different. We have seen on the Estimized platform larger downward revisions there. And I think that's because they're a little bit more exposed to the smaller businesses out there that are struggling a little bit more, that can't shift that stuff around. So I'd be a little bit more concerned about Google than I would about Facebook here.
Interesting. We've also got Apple coming out next week. Obviously, we've all been using our devices, but as we know, many Apple stores have been closed and reclosed as COVID has surged across the country. And of course, the economy and people are suffering. We're seeing, a spike in jobless numbers this week that we didn't necessarily expect. How will that translate into how many people are buying iPhones and new devices?
So obviously the iPhone number is going to be poor this quarter relative to last quarter, where the numbers were actually very good relative to expectations, because everybody's going to be looking forward here about a quarter at adoption for the new iPhone, which should come out in the fall. What's going to be really interesting with Apple, though, is we've had this conversation for years over whether Apple is going to be revalued on the multiple basis as a services company. The services revenue we expect, and the estimized numbers are through the roof. I think it's always been a question of whether it gets that services multiple or not. I've argued for years that it won't because it's reliant on the hardware platforms and the stickiness there. But it doesn't seem like the market is going to focus on the hardware numbers this quarter, and the iPad numbers could be really good again here. So I don't think Apple's in trouble, and the multiple hasn't climbed as much as some of those mid and small cap growth stocks. So not as out of the range of normal as some of the other ones.
So let's talk about how all this working from home, which many of the CEOs of these companies has said it is going to continue into the foreseeable future, maybe even forever. Of course, Twitter CEO Jack Dorsey has famously told his employees they can work from home forever. We know that Mark Zuckerberg favors this working from home trend as well. How does that impact your view on tech stocks going forward? We know that Microsoft, for example, reported a slowdown in the cloud. That hit the stock. It wasn't as strong as some investors thought it would be. So how do you see this trend, whether it's the next 6 months, a year, or longer, impacting these companies going forward?
Yeah, so as I said before, those adoption curves are going to accelerate considerably, and a lot of these trends had been in place. Really like the remote healthcare trend. That's going to be massive. Laws are being rewritten there right now. Psychologists can practice across state lines. It's going to change a lot of stuff there. In terms of work productivity, look, Microsoft Teams had a great quarter. There's going to be a little bit of a transition here in the next couple of quarters where companies figure out that they probably don't need as many people as they used to have. And I think that the labor market is going to be tougher than people expect, which is why, overall, we're moderately bearish here. We may see those numbers roll over in the next, 3 months to 6 months. In the long term, though, the cost savings that are going to come out of moving to technology, as I said, like a Slack and Microsoft Teams, DocuSign, Twilio, all of these companies are going to increase the gross margins of many enterprise companies. And we're still very bullish long term on a lot of those. Again, we're seeing those upward revisions, which are on our platform are considerably above where the street is, which really means that there's a little bit of a long-term disconnect there.
Last quick question, Lee. This big antitrust hearing that was supposed to involve the CEOs of Apple, Google, Amazon, and Facebook on Monday has been canceled. Congress will be honoring Representative John Lewis instead. How big a risk is regulation?
It's not right now. Look, it's weighed on. It was weighing on some of the multiples, and then the pandemic wipes that out. Obviously, when we look at Microsoft, they are obviously bundling Teams with a whole bunch of other stuff, and that's definitely illegal what they're doing. But the risk to actual legislation is so low right now with an election coming up, and it's so difficult for them to get their hands around the fuzzy logic of how you regulate this stuff that it's very unlikely that Congress actually is able to do it.
All right. Lee Drogan, thank you so much for weighing in on a Friday afternoon. Lee Drogan, founder and CEO of Estimize. All right, coming up, Intel posting its worst day in months after announcing another production delay. CEO Bob Swan suggesting the unthinkable that the company might stop manufacturing its own chips. We'll speak to him next. Intel shares suffering just about their worst day since March after announcing yet another delay for its 7-nanometer chips. Also, CEO Bob Swan suggesting the company might stop manufacturing its own chips after all. We spoke with him about that idea earlier on Bloomberg Television, and he went on the defensive. Take a listen.
In a world where increasingly everything looks like a computer, so our opportunity set is as big as it's ever been. What we talked about yesterday is we've pushed our 7-nanometer products that we anticipate in the 22 to 23 timeframe by 2 quarters. And that was due to a slip in the yields on our manufacturing process technology. Mm-hmm. So first, we will continue to invest in our manufacturing process technology to catch up. Ultimately, obviously, our desires to play a leadership position in process. But product leadership is much more than just process. It includes other things like packaging technologies. It includes different architectures. It includes memory, interconnect, security, and how we use software to optimize that hardware. So delivering world-class leadership products is more than simply where we are on the process node.
Right,
given that our process node slipped, what we're doing is evaluating the other opportunities we have to engage deeper with our ecosystem partners. And with our design methodology, we have the ability today to mix and match different products to put them on the same package. And what we talked about yesterday is our ability, our enhanced flexibility to make those trade-offs along the way to make sure that we are delivering leadership products for our customers, regardless of the process it's on.
Right. But Bob, no one seems happy with it right now, investors or analysts.
Well, look, we're coming off 14 nanometer. We're ramping our 10 nanometer products, and we feel pretty good about where we are. We talked yesterday about 20% higher demand for our 10 nanometer products than we had anticipated early in the year. So we're delivering on the products in 2020. We expect to deliver on 21. We expect to deliver on 22. And we also expect to deliver on 2023. So our focus and our energies are going to be on delivering these products, regardless of which process it's on in the future.
If you wanted to outsource to Taiwan Semi, which obviously some analysts have been calling for, can you do that? Even if you wanted to, do they have the kind of technology that you would need to manufacture your chips?
Well, one of the things that we've been doing over the last couple of years is leveraging third-party foundries even more than we ever have in the past. We've added over the last 5 years, our company has grown by $20 billion. And with that growth, we've evaluated when we use our own fab capabilities versus when we use the industry. So this is something that we've been doing for the last several years. We've done it even more so in the last couple of years. So our ability to engage with the ecosystem is greatly enhanced just because these relationships have grown over the last few years.
I guess what I want to understand is if you are weighing how you make your chips, what's the criteria for exiting that manufacturing part of the business?
It's relatively simple. A schedule, an annual cadence of leadership products that our customers on the client, on the server and cloud, and on the network and the edge that our customers can count on. So leadership products is what matters most, not necessarily where it's being manufactured. Where it's being manufactured is an important part of the equation, and we'll continue to invest in that. But the priority for us is making sure we're delivering an annual cadence of leadership products, regardless of what process it runs on.
Intel CEO Bob Swan there. Coming up, could Intel's pain be other companies' gain? We're going to talk about the state of the chip-making market next with Ian King, who's been covering chips for decades. This is Bloomberg. A changing of the guard in the semiconductor industry. Reports of Intel's production delay sent the stock plunging, erasing billions and billions of dollars in market value, but also sending other chip makers rising. AMD, Taiwan Semi, NVIDIA. Joining us now to talk about this shift, our own Ian King, who's been covering chips for years. And Ian, first of all, why would Intel consider not manufacturing its own chips? And what does that mean?
This is a huge thing. For the last 30 years or more, Intel has been telling people we are the best in the industry because we are the best at making our own chips. Everybody else has to go scrambling elsewhere to see what they can get. But we have the best plants. Look how good we are. This is what makes us better. We're now, Emily, you'll remember you and I have already talked about this. They were supposed to have the current technique, 10 nanometers, in 2017. Here we are in 2020, still not in full production with that. And guess what? The next one is going to be delayed as well. When things are as bad and as delayed as that, then you start to look for alternatives. And that's what basically Bob was trying to say.
We're talking about $40 billion in market value wiped off the map. Why haven't they been able to deliver on this?
That's a very good question. And I think what you said, the $40 billion is $40 billion of shock. Everybody thought, well, this is Intel. This is the world's most dominant chip company. They'll sort it out. 3 months ago, they told us that 7 nanometer was going to be fine. They were going to get back to the leadership. And then, Yesterday, they come out and said, oh, by the way, yeah, no, we're still having problems. Massive loss in confidence in what they're saying, massive loss in confidence in their ability to execute. And, you know, if you're going to bet on chip makers, why wouldn't you put your money into one of their rivals right now? That's what's happening.
So let's talk about the rivals. What does this mean for the rest of the chip industry, which is changing dramatically? You know, we've talked about how Apple is now manufacturing its own chips. You know, who benefits from Intel's lagging here?
Exactly. I mean, right at the very center of this is TSMC, Taiwanese Semiconductor Manufacturing Co. They make chips for Apple, they make chips for AMD, they make chips for Qualcomm, they make chips for Huawei. The list goes on and on and on. All or most of those companies are directly or indirectly competitors to Intel. Right? TSMC is winning. Intel might even be forced to go to TSMC itself. The others are already there. The others are ahead. This is a massive change in the industry if Intel is forced to go and stand in line with the rest of the industry at those Taiwanese factories to get what it needs. It's going to be reliant upon designing chips better than them, and, you know, we'll see whether it can do that.
Meantime, quickly, we basically have ARM on the market with SoftBank trying to unload it. Apple has said they're not buying. What happens to them?
Yeah, I mean, a hugely complicated situation because ARM's value is based upon the fact that everybody uses it. So if just one of these competitors owns it, then what happens to that value? What happens to what all of the competitors do if they're worried about being locked out? So this is going to be an ongoing, complicated process. There are various theories about how it might work out, who could buy it, who might not. Obviously, we reported about NVIDIA being interested, but I think it's safe to say that there's going to be one or two big twists or turns on the way to seeing what happens here. What is for sure, though, is that SoftBank clearly wants to realize a gain on that asset and improve its finances.
Well, we'll be following all of your reporting on it. Bloomberg's Ian King, thanks so much. Coming up, we'll have more of my conversation with Apple co-founder Steve Wozniak, including whether he thinks Apple should be broken up. That's next. This is Bloomberg. Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Monday, we were supposed to see the CEOs of Facebook, Google, Apple, and Amazon testify before the House Antitrust Subcommittee. That hearing is now postponed. Congress will be honoring Representative John Lewis, the civil rights icon, instead. But antitrust still top of mind for big tech. Yesterday, in an exclusive interview, I sat down with Apple co-founder Steve Wozniak and asked him whether he thinks Apple should be broken up.
I don't often talk about Apple things. I'm not in operations directly. And sometimes I have negative opinions about Apple being a little too much control over you. But I've thought about this one, this one that's going on right now with antitrust. And I actually take Apple's side on this one. So I don't want to say more than why? What's the big issue? You're going to have to refresh me.
Well, the issue is the App Store, the fees that they charge developers.
Yeah. 30% and giving you guarantees and protection and security in the apps that you could possibly download. When you look at what happened in the Android world, oh my gosh, yeah, I don't object to the 30% at all.
So
then when you look at if there's a little app maker that has an app and Apple does the same thing, everybody uses the Apple one, it could be weather, whatever. It could, in a lot of those cases, the app makers just don't build in the security protection that Apple offers its customers. And I believe in that very much. So on this one, I'd probably take Apple's side, but I don't know till I watch it.
What about the fact that Apple doesn't just run the gates to the App Store, is the gatekeeper to the App Store, but also has its own apps competing in the App Store, like Apple Music? Is that anti-competitive?
I think that'd be very good.
Why?
Why? Because it would be competitive. Apple would have to compete more face-to-face, and you'd see some of the other apps that people do good things as well. I don't think Apple should just run them over and build music into the iPhone. So I think that'd be more competitive. I'm for openness, competitiveness, more equality throughout things. I don't like it when the big shark eats the small penguin. I just, that's how I am.
Well, in some cases, folks think that Apple is the big shark and is preventing innovation because they are making it more difficult for smaller companies to succeed in the App Store, according to the critics.
I'll have to listen to the investigation, or I'll have to listen to the questions and the answers to have an opinion. I am against the being so big you can overrun the little guys, but if you're providing an extremely good service that they aren't, you're protecting your customers from apps that are bad or do bad things for people, all the better. Ones that are not protecting, not even looking after your own privacy and trying to escape. No, Apple's got a real good mind on that. I like Apple. I like Tim Cook quite a bit, but that doesn't mean I'm going to agree with everything. When I see it live, I might have comments that, I don't know, I think Apple could do something a little different, but who knows? So
there's this question of, should Apple be broken up? That is what lawmakers are considering right now. What do you think?
I think they've got a lot more public opinion on Facebook being broken up.
So, well, that is my next question, because Mark Zuckerberg, the CEO of Facebook, Sundar Pichai of Alphabet, and Jeff Bezos of Amazon, they're all testifying before this House Antitrust Subcommittee, and they're all facing antitrust scrutiny. How do you think Apple's position compares to Facebook or Google or Amazon?
Apple's is just better overall, in my opinion, for having protected users the best and cared about civil rights and cared about different types of people by gender, by race, by ethnicity, and caring and keeping them all equal. It's the only big tech company that pays equally by gender for the same job. So I just admire Apple so much for that. Now, I really sometimes think that Apple could have different divisions, one for computers, one for iPhones, they don't have to all be in one small local campus. They could farm out, because I've seen other companies do that, but they should be broken up. Mm-hmm. They should only be broken up if they're really, doing something bad, and to the users. The end user is the little guy. That's the little penguin, and it's, so you better find something really much worse that Apple's doing.
You mentioned Facebook and civil rights. Are you disappointed with how they've handled some of the president's posts on the Black Lives Matter movement?
More than just disappointed, the way most people are, more. Just based upon the sort of intent that comes out, especially when Mark Zuckerberg speaks, but other representatives of his, it just comes across as to, hiding the real matter and the real truth and covering it up. So I just have negative feelings that way, but then again, other people will have different opinions, and mine is not the only one.
So when you say more than just disappointed, what do you mean?
Well, I think a lot of people express the reasons for the disappointment. You quoted it, so you know that. I just get more the way somebody presents something to me. It shows an inner integrity and inner honesty or not. And I don't really read that. I read it more like reading a script is not genuinely honest. And that's the feeling I get more, especially when Mark Zuckerberg speaks. And I could be totally wrong. If I knew him personally, I'd probably say, oh, now I see another side, but that's my opinion just from a few times I've watched him on TV. Remember, I don't watch TV either. So rarely do I get to see these things. Usually just somebody sends me an old school email with a YouTube post.
The argument has been made that these U.S. tech companies shouldn't be broken up because of China, because you've got these huge technology companies, Huawei, Tencent in China, and this would have a huge consequence for U.S. competitiveness and the ability of the United States to compete with China. Does that concern you?
You're getting way too political for me. I'm not political. I have never voted for a president in my life. I made a decision when I was 20 to be this way, not be political and to be an average person and not weird out there. And I just I'm not an extremist in any way. I'm against it. So I don't know all those ideas. You know what? Different people come to different opinions and they're all right.
Well, I'm curious for your thoughts on the rise of the Chinese tech industry? Obviously, as somebody who built, you know, one of, if not the most successful technology company in the world, have you been paying attention to what they've been building in China? And do you think it could, these companies could edge out US technology companies?
Encounters in China have been on a technical level, and they're really, right. I look right down to the bottom level engineering, and they have the skills that they're good like us. We should just consider ourselves one family, in my opinion. You know, we work together and, you know, get the best. We'll do the parts we do best. You do the parts you do best, and we all win.
Apple co-founder Steve Wozniak there. All right, coming up, as we mentioned, that big antitrust hearing set for Monday has been postponed. When will it happen? We will discuss what's next. Coming up, this is Bloomberg. Verizon topping estimates in the second quarter, phone connections an essential lifeline. Verizon and other top carriers have agreed to keep serving customers even if they can't make their payments at this difficult time. Chairman and CEO Hans Vestberg talked about how the business is faring earlier today.
As we all can see, we see the pandemic moving around in the United States. We have today 77% of our stores open. We are actually going to have 100% open by end of this month. But of course, with a total different operation, the innovation in our retail stores has been great. I mean, we do curbside delivery, we do touchless delivery. We also have a requirement of mask of any customer coming in. We also, you need to book a time in many of the stores coming in. So, of course, we have changed our model. But if you look in our numbers, especially at the end of the quarter, we are start generating a lot of new customers. And ultimately, we had 372,000 new net phone additions in the quarter. And a record low churn. So this is an infrastructure that is so important. Mobility and broadband is sort of essential to stay connected with friends, family, and do your business. So we see this continue well. So we are very resilient in this time period. Of course, we have customers that are suffering. I mean, we are in a time that is unheard of. So, of course, a lot of customers are suffering, but we work with them as well.
Hans, how much, how worried are you that a lot of people will not be able to make their bills? And is this your biggest concern for Verizon going forward?
So what we have seen, I mean, we, of course, saw in the beginning of the pandemic, many asking for the pledge, Keep America Connected, whereby we are not disconnecting them. Then in the quarter, we saw an improvement on that. And today, I would say, our delinquent receivables are equally large now as before the pandemic. And the ones that has asked for the pledge for the Keep America Connected, 80% of them are actually paying some part of the bill. I mean, our work is actually to see that these loyal customers continue to be our customers. So, and we have a great opportunity to work with them with refinance, etc. So for us, this is such a crucial time. I mean, disconnecting our customers is the wrong way. We work with them. We want them to stay with us.
Yeah, so that leaves you exposed by about 300,000 customers that haven't paid. You mentioned you're working with them on plans, but I wonder at what point do you see that becoming a more material risk? Is there a time frame you look at? Is there a number that it amounts to that gets you worried?
No, first of all, I mean, I don't recognize that number. But as I said, we have 100 million, more than 100 million consumers using our network every day. There is, of course, some of them that has a tougher time. So this is nothing abnormal for us that we have a few key customers that cannot really pay us. We are working with them. So there's no time frame feeling this is worst, etc. So I just feel that we have a great network and a very loyal base that wants to stay with us, and we work with them. So I assume that they will all be our customers a year from now.
But Hans, I mean, the pandemic is different, isn't it? I mean, we were looking at the numbers. I mean, it's 1.5 million customers that were protected by the pledge not to be disconnected due to non-payment, and you only say that 80% of that made a payment. So the numbers are so much bigger than anything you've ever had to deal with.
No, they are not. I mean, that's what I'm saying. The delinquent receivables are equal right now than they were prior to the pandemic. I mean, on the base that we have, this is a fairly small number. And again, our job is to work with our customer and see that they can continue to be a customer of Verizon. So yes, of course, it's tough times, and the pandemic and the economic downturn and unemployment is extremely high. But we don't feel that this is something different than what we've seen before, and that's why we work with our customers. So there's no trigger event for that.
What about for small businesses and your subscriber base in that arena?
The small business is a little bit different. They will, of course, have a larger impact, and they are a little bit higher on the on Keep America Connected and asking for refinancing. And some of them are, of course, shutting down their businesses.
Verizon CEO and Chair Hans Vestberg there. Well, we are now waiting for the new date that 4 tech CEOs will testify before Congress on antitrust issues. The hearing where the CEOs of Apple, Google, Facebook, and Amazon were supposed to testify has been postponed. Joining us now to discuss what's next, Ben Brody, who covers tech lobbying in Washington for Bloomberg. So, Ben, Congress will be honoring Representative John Lewis on Monday instead. What do we know about a new possible date for this hearing?
Well, we've spoken to Congressman David Cicilline, who is sort of running this hearing series, this probe into big tech competition. And he said that he does want to get it back on the books relatively soon. Was talking to a colleague of mine even about possibly next week. It did sound like it would maybe move a week or two longer than that, particularly because of earnings next week. But it does sound like he wants to get it back on the books relatively soon. So we're waiting for a date, but we think we'll be doing some of the same coverage just a few days later.
Right. Next week, you've got earnings for all of those companies coming up as well. You know, what have you been hearing in terms of what the main lines of questioning are going to be for lawmakers? What are you specifically going to be watching for?
I'm going to be watching for these 1.3 million documents that committee staff have told me that they have obtained from the companies. I think the lines of questioning may very well arise from those documents. It's possible that they could be very embarrassing. If you remember, the committee even requested executive correspondence back in the fall. So it'll be really fascinating to see what they found in there and what they're going to be confronting the CEOs with. I am particularly watching Jeff Bezos and Amazon. It's going to be his first time on the Hill. He and Cicilline, or Amazon and Cicilline, have really gone back and forth about whether Amazon uses third-party merchants, specific data from individual sellers to launch competing products. Cicilline has all but accused the company of lying about it, so I think it's going to be a real flashpoint between them.
And I know that at least one congressman was interested in hearing from Jack Dorsey as well. Has that materialized into a formal invitation?
So the invitations are the prerogatives of the Democrats. That was Jim Jordan. He is the top Republican on the House Judiciary Committee. This hearing series occurs in the Antitrust Subcommittee of Judiciary, so he has sort of prerogative to send out those kinds of letters. But the Democrats have repeatedly told us they will not be inviting Twitter. They just don't see it as a company with a lot of antitrust complaints. And they see the Republicans as basically wanting to make this about allegations of anti-conservative bias, Twitter's treatment of President Trump or something like that, and kind of take the hearing a little bit off topic. They don't want to do that, and they're not inviting him, they've said.
All right. Ben Brody for us there. He'll be tracking the hearing as soon as they set a new date. Ben, thank you so much for joining us. All right. Still ahead, while the pandemic has dealt a major blow to air travel, the RV market has seen a massive boom. We're going to talk to the CEO of Outdoorsy next. This is Bloomberg. When the travel industry got slammed earlier this year due to COVID-19, Jeff Cavins, the CEO of the RV rental company Outdoorsy, didn't know if the startup would survive. A few months later, they're now seeing record bookings, hired back staff that they had laid off. We talked to him about just how it works.
Outdoorsy is a marketplace, an internet marketplace, where owners of recreational vehicles can list them for rent. There's 54 million of them sitting in people's driveways and backyards, but 12% of American households owns one. And 700 million people around the world, and primarily in America, North America, can go to the website and actually pick one that they want to rent, select their dates, set up a key exchange or a pickup point with the owner, and they show up and they go off on their adventures.
I just had a friend use this to go from Texas to North Carolina, and they had an amazing experience. Who are the new entrants?
93% of all of our customers now are first timers. And this has always been a bit of a busy industry with people that love camper van travel, back roads, camping, fishing, going to national parks, music festivals, NASCAR, et cetera. But now the entire American society has caught on to the fact that this is the perfect way to self-quarantine, to maintain control of your environment, bathroom and kitchen, yet travel and maintain the freedom of mobility.
So obviously this has been in part very popular because of the pandemic, because there's been, no desire to travel by air. But the question is, as we come out of it, is road travel, and not just road travel, but RV travel, is it a passing fad, or do you think this will continue? It
has become now known to Americans, Canadians, people from around the world. It's very popular in Europe. It has been for a long time. It really made its way to the U.S. over the course of the last couple of years, driven primarily by millennials and Gen Z. About half of our customers are under the age of 40, which is a bit unusual when you think about typical RV travel. You think of it as a baby boomer or a retiree, the retiree generation activity, but it's really driven by young people.
I spoke to Brian Chesky recently as well, and he said, yes, road travel is booming, but also travel is never going to be the same, and it's still a scary world out there. The virus is resurging across the country. Summer is a great time for RV travel. The weather is great, but what about the fall and winter, especially given the resurgence of COVID-19 across the country? What are you expecting?
It's something that I think we should all be concerned about. Certainly, it's sad to see that mass market airlines and mass market hotels are suffering from this. We were suffering as well when the COVID lockdown happened. But what I think happened with users and consumers is they found that they can control their environment. So an RV or a camper van is a perfect way to avoid COVID because you can disinfect your kitchen. You can disinfect your bathroom, your sleeping quarters, and you can maintain it and control it. Yet you have the freedom of mobility.
Even in the cold weather as well?
There is kind of a notion that travel, and especially RV travel, tends to move up and down with the weather. So in the summer months, people move north to escape the heat. And then conversely, in the winter months, they move south. Well, they'll just do it now without using an airplane in a hotel. They'll use an RV for that experience.
Now, you mentioned earlier in the year you didn't know if Outdoorsy was going to make it. You furloughed some staff. You've since rehired those people back. You've hired additional people. Salaries are still low. Where is the business positioned right now? And, how are you sort of planning out your financials to make sure you survive?
When COVID first hit, as you mentioned, we had to, we lost 90% of our business. When we had to engage in layoffs, I asked everybody in the company to take a pay cut. I go without a salary, and I've committed to go without a salary for the rest of 2020. The management team took pay cuts up to 50%. But what we wanted to do was preserve our frontline workers. Those are our customer service people who take care of the listers, those owners on our site, and the renters. And we were able to put the company in a position where it was healthy. We cut a lot of fixed costs out of the business, and then the surge came. But it came back with a surge that nobody expected. But we grew 4,500% since April to the end of June. It has sped up. We're doing over $3 million a day. Our all-time revenues will generate, our all-time transactions will exceed $750 million within the next week.
Last question. I know you've built several Silicon Valley companies. What's your vision for what this becomes?
Our goal with Outdoorsy is to become first at the top of mind for anybody that wants to engage in outdoor travel. The cities have figured this out for decades. We have hotels, we have rental cars, we have airlines, we have the infrastructure of a city. But when you start traveling into the urban environments, there's 33 billion meters of road on this planet. Most of it is not well organized for where do I stay? Where do I put my camper van? How do I rent a camper van? How do I get repairs for the camper van? What gear do I need to bring with me to live on the road for 3 months, which is what we're doing right now. So our goal with the company, this is our first act. When Jeff Bezos was building Amazon, it wasn't just about building an online bookstore. He had a bigger vision. our vision is pretty big. You'll see something coming from us in August of this year.
Not gonna lie, kind of planning my first RV vacation right now. After that was outdoorsy. Founder and CEO Jeff Cavins. And that does it for this edition of Bloomberg Technology. Wall Street Week is next. Have a wonderful weekend, everyone. This is Bloomberg.